I didn't grow up around money, but a few years ago, I started paying attention to what wealthy people, actually do with their money, not just what they say. The biggest lesson, the rich don't just save money, they grow it. And a lot of what they're reinvesting in is out of reach for regular people like us. They invest in private companies through crowdfunding sites. They buy fractional shares of real estate, getting rent money without owning a whole building. They even invest in things like art, farmland, and music royalties. It used to be a billionaire's game, but now, platforms exist that let you start with small amounts. The real difference isn't always money, it's mindset. They treat money as a tool to be grown, not just something to be spent or saved. They put it to work intentionally. If you want to build wealth, start thinking like them. Start small, stay consistent, and let your money work for you. I didn't grow up around money, but a few years ago, something clicked. I started paying attention to what wealthy people actually do with their money, not just what they say they do. And one thing became crystal clear. The rich don't just save money, they grow it. What shocked me even more, a lot of what they're reinvesting in right now is out of reach for regular people like you and me. So today, I'm going to show you exactly where they're putting their money, and why I've started doing the same. When I first heard the term private equity, I thought, nope, that's not for me. That's billionaire stuff. But then I learned something wild. Thanks to crowdfunding platforms like Republic and StartEngine, you don't need $100,000 to get in anymore. I personally put just $250 into a fintech startup I believed in last year. Yeah, it's high risk, but if it grows, so does my little slice. Angel investing used to be something only the rich with deep connections could do. Now, anyone can participate at some level. This doesn't mean you should throw money at every shiny new startup, but it does mean the door is open in a way it wasn't before. The rich understand that backing early ideas is a long game. They don't expect every single investment to be a home run, but when one does hit, it can change the entire math. Another area where the wealthy are parking money right now is real estate. But it's not just the luxury penthouses or beachfront homes you see on TV. What's really happening is a move into accessible real estate investments that don't require millions. Fractional real estate platforms like Fundrise or Realty Mogul allow everyday people to invest small amounts in large real estate projects. This means you can tap into the same wealth-building tool the rich have relied on for generations, but without needing to own an entire property yourself. Wealthy people have always loved real estate for two big reasons. First, it produces income. Rent checks, lease payments, and commercial contracts all provide steady cash flow. Second, property tends to appreciate over time. Even when markets dip, real estate has a way of bouncing back and climbing higher in the long run. When inflation is eating away at the value of your cash, real estate holds strong. That's why so many rich people see it as one of the safest long-term bets. And now, that same model is available in bite-sized pieces for anyone willing to start. Beyond that, something else has been quietly growing: alternative assets. This is where the rich have always had a hidden edge. They buy things like art, rare collectibles, farmland, even music royalties. They don't just buy them because they enjoy them, but because they know these things appreciate in value over time. For most of history, this was completely off limits to regular people. If you didn't have millions, you weren't buying a piece of farmland or a famous painting. But the game has changed. Today, you can buy fractional shares of these assets, just like you would a stock. The idea is simple. Instead of needing the full amount to buy a Picasso, you can invest in a small share of it. Instead of buying 100 acres of farmland, you own a piece through a fund. This is how the rich think. They spread their money across things that hold value no matter what happens in the stock market. And now, the everyday investor can do it too. Of course, stocks are still a massive part of the story. But here's the difference. The rich aren't trading in and out of positions every week, trying to time the market. They don't waste energy guessing what will happen tomorrow. They invest in ownership. They pick companies they believe in, hold for the long term, and let compounding do its job. Many of them favor boring, stable businesses that generate consistent returns. It's not about excitement, it's about growth. What most people get wrong is thinking you need insider information or risky bets to succeed. In reality, many wealthy investors stick to broad index funds and blue-chip companies. They know that slow, steady growth beats flashy wins that rarely lasts. And while others panic during downturns, the wealthy see opportunity. They buy more when prices are low, and they stay invested when the markets recover. That's how wealth multiplies over decades. Another place the wealthy are putting serious attention right now is into technology and innovation. Things like artificial intelligence, clean energy, and biotech aren't just buzzwords. They're the industries shaping our future. The rich understand this. They don't necessarily know which single company will dominate, but they know these entire sectors will expand massively over time. That's why they invest in funds and ETFs that spread their exposure across these areas. It's a way to ride the wave of innovation without needing to pick the winners perfectly. What's fascinating is that none of this is out of reach. Whether it's startups, real estate, alternative assets, or technology funds, the average person can start small. The gap isn't always about money. It's about mindset. Most people think, I don't have enough to invest. But most of the rich didn't start with millions either. They started by treating money as something to be grown instead of something to be spent. That is the shift that anyone can make. And then there's the point about diversification. Wealthy investors don't put everything in one basket. They spread their money across different assets, industries, and risk levels. That way, even if one area struggles, the others can hold steady or even grow. For a regular person, this could mean balancing stocks with a little real estate, adding a small slice of alternative assets, and keeping some cash on hand for new opportunities. It doesn't have to be complicated, but it does have to be intentional. But here's something most people overlook. The rich also invest heavily in themselves. Courses, coaches, experiences, networks are all investments, too. They know that the right knowledge or connection can produce returns far greater than any stock. If you look closely, many of the wealthy put just as much emphasis on building their skills and relationships as they do on their financial assets. The greatest asset you will ever own is your own ability to think, decide, and act on opportunities. And that only gets stronger when you keep reinvesting in yourself. So, the takeaway is this: the rich aren't magical. They don't have secret access to investments you can't touch. Many of the opportunities they use are now available to anyone who is willing to look beyond a traditional savings account. The real difference is that they move their money intentionally. They don't let cash sit idle. They put it to work in places that have the potential to grow. Instead of waiting for the perfect time, they understand that momentum creates results. While others hesitate, they start small, stay consistent, and build over time. And the truth is, this moment in time is special. With technology opening doors to crowdfunding, fractional ownership, and new asset classes, the barriers to entry are lower than they have ever been. That doesn't mean there's no risk of reinvestment, has it? But the risk of doing nothing is far greater. Inflation will eat your savings. Missed opportunities will widen the wealth gap. What feels safe in the short term, like holding on to cash or waiting, often turns out to be the most expensive decision in the long run. The rich know this, which is why they stay invested.